SunPower has been one of the leaders in the solar industry for well over a decade, but this has not been a great performing stock. Frankly, there haven't been a lot of really good performing solar stocks over the long term. A lot of companies have gone bankrupt, but this does appear to be one of the companies that is well positioned to rebound in 2024. And that rebound may happen before some of these suppliers like Enphase Energy, who, by the way, was a company that was bailed out in part by SunPower. SunPower got a huge benefit from that. Uh, but there is definitely a tie between those two. And then Solar Edge is the other company that has really fallen over the last 6 months or year. So SunPower is a kind of company that I think you want to watch if you're a solar energy investor, especially if you're in the markets like residential solar, which is where SunPower generates a vast majority of its business. And one of the reasons that I want to keep an eye on this one in particular, besides the fact that I'm a shareholder, is that this is a company that takes less financial risk than its competitors. Sunrun installs all of its solar installations with leases, so they're taking the financial risk for interest rates. I've done videos on this in the past, but all of their contracted payments for the future are arguably negative value depending on the discount rate you use. If you use a 6% discount rate, they have a ton of value on the balance sheet. If you use an 8% discount rate, which their management says is what they're getting in the market, they actually have negative value on the balance sheet. SunPower is a little bit different. They sell about half of their solar systems with cash or loans. A lot of them are even included in mortgages because they're included in new homes. So that's the reason that I'm interested in looking at SunPower. But from an investment perspective, I think it's time to take a step back and look at the stock. Is this a value right now? Is this the kind of company that can recover next year? I think so, but that's what I'm going to dig into today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. I want to start by going through a few pieces of information I think everybody needs to know about SunPower. This is just a look at some of the metrics from the market for SunPower, market cap of $750 million. That's something I think to keep in mind because SunPower typically has been the kind of stock that if you can buy it at a good valuation, you can do relatively well. If you're paying a huge multiple for a company like this, and really any of these solar companies, then you're in for potential disaster. But $750 million market cap. And now let's look at some of the highlights. 18,800 customers added in the third quarter. They're looking at about 80,000 potentially for 2023. That is down from previous expectations. Also, this number was down pretty significantly. Adjusted EBITDA per customer before platform investment. So what that is doing is trying to calculate what is the present value of the long-term cash flows that they're going to generate from each customer. One of the reasons that's down in 2023 is higher interest rates means that when you sell off the future cash flows, you're going to get less upfront money for that. It's a little bit like buying a house. If you say that your budget is a certain amount per month and interest rates go up, well, then the value of the house goes down. That's what's going on with solar right now. And that's the reason that less value is being created by a lot of the solar installers like SunPower. I'll get to what that might look like in the future. But like I said here, they finance 56% of their projects with leases and loans. So they're able to generate a little bit more value there. This is a look at where the customers are trending. You can see that based on their guidance, they're going to have a little bit of a weak fourth quarter when they were expecting that to be a strong quarter. A lot of that has to do with California and the net energy metering 3.0. So as the industry has adjusted to that, you can see that bookings are starting to pick up in September. That's 1 month, so I don't want to over-index on that. But it seems like things should be getting a little bit better later this year and into 2024. I talked a little bit about some of the headwinds that SunPower is facing and that the entire industry is facing. But let's look at one of the tailwinds or potential tailwinds for SunPower and all of residential solar, and that is rising utility rates. The blue columns here is the percent year-over-year increase in utility rates. And what utilities are doing is they're saying we not only need to invest more in the grid to operate a functional grid, so that's not only building more power plants, but also transmission and distribution investment. That gets spread across all customers. And so that needs to be charged back to customers. That's why you're seeing rates rise across the country. And there's some states where there's some really big increases, particularly in states like California. So you can see here that the year-over-year increase just through August 2023, 12% in California. So that's a really big increase, and they're projecting a lot of other big increases going into 2024 as a lot of these utilities adjust to higher interest rates. So something to keep in mind will make a lot of solar more competitive, maybe help those margins for a company like SunPower as well. The other piece that doesn't really make its way to the income statement is SunPower's share of SunStrong, or the financing unit that the company has, and any sort of value for lease renewals. $295 million is what they're expecting. Now, this is at a 6% discount rate, which they disclose right down here. I mentioned earlier that that should be much higher than that, but you're still looking at about $100 million in value for those assets if they are renewed based on these assumptions. If you just increase that rate to 8%, which I argued earlier is probably more realistic. Cash from operations also positive, and net recourse debt is pretty reasonable at $143 million. And that's offset by $104 million in cash on hand and a lot of inventory as well. So from a balance sheet perspective, SunPower is sitting in a much better position than it was just a few years ago. And here's their updated guidance. Last year, $68 million in adjusted EBITDA. This year, they're expecting that to be negative. And that's the impact that I talked about earlier. Higher interest rates both impacts volumes and margins. So expecting this to be negative 25 to negative $35 million. But they were previously expecting about $100 million in adjusted EBITDA. So if that did happen, you have a $750 million stock. This could be a pretty reasonable value if the company recovers in 2024. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The question here for investors is if we're at a low point for SunPower and for the residential solar industry in general. And I think the argument is that we are. We are hearing this from a lot of companies that there was a huge pullback in the second and third quarter of 2023. There's a lot of adjustments in California. I mentioned net energy metering 3.0 earlier, but demand was not that poor in the rest of the country and the rest of the world. So it's going to take a little while for the industry to adjust to net energy metering 3.0 in California, the biggest market in the US, and then also higher interest rates. But there are a number of tailwinds that I think are really going to help a company like SunPower. One that I didn't highlight a lot in this video is in the third quarter, SunVault, which is their energy storage solution, 60% attach rate in California and 25% nationally across all of their channels. That is only increasing as it becomes more economical to add energy storage. So that's going to increase the dollar value of each installation. They can also generate long-term benefits and revenue from controlling that energy and helping send energy back to the grid at opportune times. So potentially tailwinds there. Also tailwinds from higher electricity rates. If people are getting higher bills of 10, 20% yearly increases, maybe they're going to think about going solar a little bit more. I think that's going to happen in a lot of cases. And then we have heard from almost all of these installers that they're expecting lower prices for their components. So that would be things like inverters, solar panels, racking. When you go through a period like this, you cut as much cost as you possibly can. That's going to have a negative impact on companies like Enphase and SolarEdge, some of the companies I talked about earlier, but it is going to help margins for SunPower. So I think 2024 is going to look much better than the second half of 2023 did. The market seems to be pricing in a lot of negativity, but this is still a growth market. If they can get back to profitability and continue to scale the business across the country, I think this will be a market-beating stock. The challenge, as always with SunPower, is you have to buy at the right price. We're down near $4 per share, $750 million market cap. I like that valuation, and I think this will be a much more valuable company long-term, whether they're selling projects or whether they're financing them themselves. But let me know what you think about SunPower. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.